Hello and welcome everyone to the Commodity Report for the 23rd through to the 24th of February 2023, presented by myself, Phil Carr, at the Gold and Silver Club. So with that, we've seen oil prices, they've rallied over 2% on Thursday. Natural gas prices, they've broken out over 5%. We have the dollar at the moment, which is trading out to 7-week highs. As we talked you through at the beginning of the week, we saw big opportunities if oil was to come back sub $75 per barrel. In fact, we took the opportunity just on Wednesday through to Thursday to sniper in under $74 per barrel. And we've now seen over 2% breakout to the upside on oil, trading back towards $76 a barrel on Thursday. Now, alongside that, natural gas prices, they broke down to 20-month lows on Wednesday. We've seen a capitulation just below the 2 handle, and as a result, we've seen a slingshot move higher. Nat gas prices, they're currently up over 5% on the day. We have actually taken the opportunity to buy just yesterday after the selling pressure that we saw all the way back down towards the 20-month lows. And we're definitely seeing a short covering rally at the moment as traders who've been selling short into nat gas throughout this year have taken the opportunity of the breakdown towards 2 to book their profits. And as a result, we're seeing a nice pump to the upside at the moment for nat gas. As you know, prices, they broke out towards 10 last year. Subsequently, we've seen a break all the way from 10 down to 2, and now we're seeing a nice reversal after an 80% correction to the downside from the all-time highs that were hit last year. Incidentally, if we were, for argument's sake, to see a reversal from 2 back towards 10, that would represent natural gas prices going up by a factor of 5x in price if we were to see a reversal from 2 back to 10 in the coming months or over the course of 2023 into 2024. Now, moving back to gold, as you mentioned on the week ahead commodity report, we don't necessarily see these prices right now as massively attractive to jump right back in to this market at the moment. We want to see a bit more confirmation on that. We're seeing gold tend to tread water sideways to lower right now. It's trading around $1,820 per ounce. Now, as we go into next week, we may well see a bit more further pressure on some of the metals as we have the usual end of month outflows. Then, of course, we're going to be moving into March. Wednesday, the 1st of March next week. So that's where you can start to see a bit of a bounce. And then we've got further volatility, which will come off the back of the non-farm payrolls next week on Friday as well. So right now, we do see some of the bigger opportunities here on the energies and, of course, platinum as well, which broke out to 1-week highs at the beginning of the week. We talked you through it on the week ahead commodity report as well. Platinum to gold ratio is currently trading at 0.5. So that means platinum prices are half the price of gold. We definitely prefer platinum here. As you mentioned previously, if we were to get a break and close back above $940 per ounce, that's where platinum becomes a lot more interesting. We, of course, had a break all the way out to $960 per ounce on Tuesday through to Wednesday, with platinum prices breaking out to 1-week highs. That's where we perceive some of the bigger opportunities right now. And again, as we go into next week, look out for the potential of further profit taking right at the end of February. Then fresh capital to come into the market from the 1st of March onwards. Then you're going to get massive volatility off the back of non-farm payroll next week as well on Friday, which again, you want to look out for to take advantage of either snipering in at lower prices on commodities or banking profits if we do get further breakouts like we're seeing at the moment on nat gas and oil as well. So with that, if you are finding that you're getting chopped up a lot at the moment in the markets, particularly on the metals, this is where you want to be utilizing more data, statistics, research and intelligence to really understand where we are at within the daily cycles, the weekly cycles, the monthly and the quarterly cycles. Further align that with the intermarket correlations, the ratios in the market, of course, the capital flows, very important, and the key areas of liquidity which are being targeted, the areas where you want to be looking at snipering in, and also the levels to bank into strength when we are seeing these impulse pumps to the upside on many of the commodities right now. For example, oil, the previous week we managed to bank within 10 points of the high when we're banking at $80.50 per barrel, 2,000 points profit booked there. We only ended up rounding out to $80.60 per barrel before rotating all the way back below $74 a barrel this week, where we've essentially got back into the market, rinse and repeat. Make sure you take advantage of this. So again, many of the markets right now, they're range bound. Very simply, just want to buy at the lows, then bank at the highs and rinse and repeat that cycle. But again, this comes back down to understanding the cycles, understanding the capital flows in the market, and then of course further align that with the real-time data-driven cycles that we see day to day and week to week for each commodity. And then finally, further compound that with the macroeconomics, the fundamentals, the geopolitics, which are of course very important right now. And then of course how the institutions, funds, banks are positioned in the market. That is of course going to help you massively to get an edge. So with that, if you would like to join a professional mentorship program, join our community of successful traders and learn the professional research-driven approach to the market, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.